You got euro dollar down 74 pips right now. Aussie dollar down 70. Pound dollar down 52. U.S. CAD's up 49. U.S. francs up 66. Euro yen right now down 57 pips. Pound yen down 30 pips. U.S. yen up 16. And then looking over at our metals, we got gold right now down 17, 18 points right now. Down a little over 1% on the day. We got silver is currently down almost 2% on the day, with copper down a little over 0.5% on the day. So with all that being said, let's check some of these markets out, look what's going on, and see if we can tie some pieces together and just see where it's all at. First place I want to start is actually just looking at these indices. So we were talking about this morning on the Bull Bear Binary Hour that I co-host with Steve Rhodes and Tommy O'Brien. And Tommy made the call, and it was a beautiful thing. It was a great call. Market went over here, and it was just sort of oscillating around, not doing a whole lot. And, overnight, and then all of a sudden, right around the European session, things just start falling on down. So we'll check out the news here in a minute. But it drove the market down to basically a 0.7 level. It tried to break through that. Didn't really have any volume. You can see how it had volume all the way down, volume, and then the volume just stopped. Look at that. And, I mean, it doesn't seem like a big volume bar because, there's not a whole lot going on. But if I just zoom in on it, it'll look a lot bigger to you. There you go. So that volume just stopped right there at the 0.7 deviation level. And market, it went down. It gave you another little extra, gave you a few extra points. But then it just really oscillated. It stood and stayed in that area for about 7 hours. Just ranging a few points right here. Then it ran on back up. Bell triggered off. Boom. We get a gap fill within minutes. So great gap fill play right there. Filled in, right to the tick. It's like, one tick above settlement price on the S&P. And came on back down basically the half deviation. And this was right when we were on the air. Tom's like, hey, you know what? I think this thing could go down, but right now I think it's actually going to go up. And he's like, I think it's going to hit at least 1653. He's going to decide what to do from there. And I'm like, hey, by the way, 1653.50 is the settlement price. And he's like, sweet, that's perfect. So we put on the spread trade. We even look at a binary trade that you could put on. You could have bought it for like 17. Easily sold it for like 45.50 while we were on the air, and it kept going up after the show as well. But obviously the spread hit the profit target and did great on that trade right over here. And moved on up and actually went all the way to 1658. But it did definitely come up to this 1653. This was right as the show was wrapping up. It was like 1652.75. And it was just hanging out like right there. That's pretty much where we called it to, move in the next, basically by 11 o'clock. Moved right to that point, pulled back down. We started getting some really strong tick volume. But basically couldn't keep up. And the market turned right back around. And all of a sudden I saw this flood of tick volume coming right back in on the market. I look at a market noise indicator. And as that noise was basically like still listening to the pits, listening to the electronic pits, and it just started flooding green, and you saw all the indices run back up. But really, it was nothing that spectacular in the sense of, it ran up, came back down, and it's just oscillating around settlement. It's a flat Friday. So we might have to find a trade, So with the S&P just being flat like this right around its settlement. And so we'll come back to that. All right, we'll come back to checking out a couple trades here. We'll give it a little time, because we like to have a little less time so that theta just eats the premium right out of the binaries. But let's go ahead and let's check out a couple of the other ones right there. We got that NASDAQ, and NASDAQ did the same thing, except for it actually was able to punch up to half a deviation on that move back up, on that strong move. And like I said, market opened, got a lot of strong volume. It pulled back. It didn't do near the pullback. That's why we got that move back up to a half deviation. So now when it moved on up, right there about 11 o'clock, it did the pullback. In this case, instead of being a pullback that went back up to settlement, it was a pullback that went down to settlement. It's bouncing off that. So it's basically stuck right now between the half deviation and the settlement level. And we can go over and we'll look at the Dow. So the Dow right here, what do we got going on? Well, the Dow, it's just a mirror image. It actually was able to punch from -1. It literally went right to the 1 deviation mark, which is what we expect. We expect like 0.7 to 0.3, or we expect, like negative 0.7 to 0.3, or we expect, 0 to 1, or we expect 0.5 to 0.5. All those would be a 1 deviation move, right? So, and I'll go back, I'll look at this, sort of show you what I'm talking about. like on the S&P, right? We got to move down to 0.7, but we got to move right back up here to 0.1, and or basically the settlement price. So let me one thing you can do, like I'll grab the ruler right here and pull out this on it. It'll let us see basically what a deviation is. Basically, we have about 14.5 points on a deviation. So how far did we move from this point all the way up to that high? We got about 17 points on that. So I mean, it basically just stayed still. We're talking a 1 deviation move. And check this out. If we go over here and take this high right there and go down to the low, what do we get? We get 16 points. So, I mean, all the moves right now have been contained within a 1 deviation move. And that's 70% of the time, that's what we expect, is a 1 deviation from high to low. Could it break out of that? Yeah, of course it could. But that's 30% of the time. So we're really going for that 70% high probability movement, and being aware that it should get weaker should it pass through a 1 deviation move. Okay? And now we are we have the 1 deviation levels right there, but let's go ahead and check out the Dow. So the Dow, did we have that same thing happen? Yeah, we had the same dynamic. We had to move down. It actually, stretched outside of it. We got a little more than 1 deviation on the Dow because it went down a full deviation and then a little bit, and it went up half a deviation. So we almost got about a 2 deviation move. And again, I can just measure that right here. And let me change this. I'm going to change the font color because I bet you can't see that at all on your screen right there. And let's just go and we'll just make it black is easy to see. Alright, there we go. So we got basically 96 ticks right there. And I can go, okay, well, how far do we move from here down to here? That's obviously going to be a little more than 96 ticks. And I'll change that one as well. I'll just set that as a default, make it really easy. And here we go. Update and default. Now we can do those very simple and don't have to keep updating your numbers. And you really want to learn how to use the different features on any platform that you use, because it makes life a lot easier to draw, and you're not just looking at charts, but you're actually interacting with them. But 150, so that's about a 1.5 deviation move from high to low from the overnight. What about from this overnight to this morning? What do we get? And we got about 178 ticks. So we got about a 1.7 deviation move on that. And I got to set my outline and my text. There we go. Now when I draw, there we go. Much easier. All right, so we got the Dow right there. But we're staying in those deviation moves. Let's check out one more. Let's go over and look at the Russell. So the Russell 2000 right here. So high to low, what do we got? Well, we got to move from about here down to right there. We can put that on the ruler and go, what does that mean? How far was that? That was about 13 points. And then we can go over here and go, oh, what is 1 deviation? So we can take that from settlement right down to here, about 13 points. So that was a deviation move from high to low. Even though it didn't hit the 1 deviation, it hit a 1 deviation move. What about on the way back up? Okay, because we bounced off this, right? Right there, 13 points. So, one thing you want to make sure you are looking at, taking advantage of, is don't just get so reliant. Now, the deviation levels are insanely accurate, okay? I mean, it'll bounce right off of them. But how much wiggle room do you want to give, okay? So sometimes that wiggle room for me is going to be from the high to the low. I'm like, hey, it hit a deviation. That's like a deviation level. And and if I want to be super precise, I'll just use the deviation page, because it'll actually tell you what 1 deviation is. And we post these every night. This is where you can get them. You can chart them on your platform, whatever. So I'll pull this up right here, let you see that. And we got the current deviation levels. So right over here, yeah, okay. On the small caps, we got a 12.5. That's what we said, 12.5 point deviation. All right. So I could actually take this, and this is sort of a method that a lot of people don't know about, don't use, but it's a good one to learn. Okay. I can take all that knowledge I have right there and go, all right, what is the high? Okay, so we got the high right here. And I can then put this over here. So let's put it in a place where we'll be able to see it when we're going to zoom in. And then I'm going to grab this little arrow And I use Ninja Trader, by the way, for this. It makes it really easy to do a lot of different things. Basically, anything I can think of that I want to get done, I can do in Ninja. All right, so that's 12.5 points. Now I can go over here and I can just draw like a line right at that level. Okay, so we'll go over here and put that right there. That's a 1 deviation move. And so technically it has hit a 1 deviation move. It may not have hit the 1 deviation from settlement, but it did hit a 1 deviation move. And it basically just, to the tick. It's right there, like 1 tick under it, and then boom, back up. So, really, like I said, just a perfect deviation move on that. And then on the way back up, we can take it over here and we can go, okay, well, what about from this low, right here on the Russell, okay? I gotta grab the ruler. So from this low right here, all the way back up to right here. So 13 points. So just outside, just a few ticks outside of a 1 deviation move. And so that was my deviation move back. And again, I expect it to pause, hesitate, go choppy, maybe reverse, okay? But I'm expecting that to at least be a point where the market pauses. And you'll notice along the way, you'll see this too. You'll see it like at 0.5 deviation levels. You'll see it at 0.7 deviation levels. So like right here, like it oscillates. 0.7, what does it do? It oscillates. Well, I got here at a 1, and it oscillated before it turned back around and went on back up. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're just checking out deviation levels. And this is probably one of the most important and probably also one of the most, I say, misunderstood, misused, lacking pieces of information in most traders' trading plans. And I'm getting really excited about this because I got my team of programmers that I always have them making tools for me. So one after the other. And anyway, so we have now started collecting all the data on 40 futures markets. Like I think we have like 15 FX pairs and something like 3,000 stocks and ETFs. And so we're working on collecting all that data, and then we got to go in and build all the stuff to pull out all the implied volatilities, and then we got to tie in the formula, the deviation formula for it. And once that's done, then we're going to make a tool where you can go in and basically any optionable stock futures pair that, or even FX pair that can combine with an optionable FX pair that's exchange-based somewhere in the world, we're going to have the deviation levels on. So very, very excited to be able to put the pieces together and make it available for people. I mean, if you're trading Apple, Google, Microsoft, anything that has options on it, you'll be able to use these deviation levels. And so right now we cover, a lot of the major markets. We cover right now we're basically covering futures in Forex. So we have the Russell 2000 futures, we got the Dow futures, the S&P E-mini futures, the NASDAQ futures. We got Aussie dollar, pound dollar, euro dollar. And we have, dollar franc, dollar CAD, dollar yen. We also have corn, soybeans, oil, natural gas, and gold, copper, and silver on the deviations. So we're going to have thousands. Right now we have a little over a dozen. But it'll be pretty exciting. But they're so accurate, and it works just as well on stocks and everything else because it's market expectations of how far the market will move. And I'm hoping in the next 3 to 4 weeks we'll have that available. And but I'll keep you updated. We just keep trying to add in different pieces. Now we can go check out a couple other markets real quick. We'll check out our ags. We got corn. It moved on up to 0.7. You look at that. I mean, right there, and just hanging right out at the deviation, just oscillating between 0.7 and 0.5. And again, what happens? Let's look at this. Okay, let's take the low after settlement. Okay, and let's track it. So first, let's figure out what one deviation is. We'll just go from here to here. And that's 13 points. And then let's take this high, go to here. That's 12.75. But corn actually doesn't settle right there. Okay, where does corn actually settle? Over here at 130. Okay, so basically, but the settlement price on corn. So that's where the 654.25 comes from. But I mean, we're right there within maybe a tick or two. And that's even, I'm not necessarily drawing it right down to the point. But if you take the overnight, because this is after corn closes right there, 230? Yeah, so it closes down, and then, okay, here's our overnight. So right there. So 13 points if I draw it to the tick. And so that's giving us a one deviation move. Again, something that is easily missed by a lot of traders. That are using these deviations. They think, it's got to hit the one deviation mark. It's got to hit a one deviation move. The one deviation mark is just another confirmation. But so you could actually have an intra deviation, 1 deviation move. And that's the most important of all the moves is 1. So 0.5, helpful, 0.7, very helpful. These are going to be oscillation zones. Expect them to be oscillation zones. But that 1 deviation mark from the low to the high, make sure you're picking that piece up, because if you're not, you're missing out on just understanding, like, because you're thinking it's going to go on to from 0.7 to 1. You understand it's already went 1. Okay? So that's why it's helpful. We also got soybeans right here. Look at this. I mean, soybeans just running. Right there from the settlement, ran on up, not only to 1, 1.5, and just blew right through the levels. But you can see right there at the 1 deviation mark, and it basically stayed right there at 1 deviation. Okay? But look at this. 1 deviation just tick, and then comes back down. Pulls back up right to the tick, comes back down. And finally says, okay, I'm going to explode through it. Bam! Right on up there the next 30 minutes, right into 1.5 deviations, and pulls on off of it. So again, these are, algos are taking all this stuff into account. Option pricing models take these into account. Even have the Nadex spreads and binaries. You'll see binaries lining up right at these deviations. So it's all based on implied volatility. Everything, all the pricing models have implied volatility, because it's saying, what does everybody say everything is worth? That's where implied volatility. That's where option prices come from. Okay, you have 2 pieces. one of the, you got 5 pieces. There's interest and there's price. So there's also your basic like theta, delta, gamma. But all that really comes down to implied volatility. How much air's in the tire? Okay, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we are looking at soybeans. We got our ags knocked out. Let's look at some metals. So right on over here, we're going to check out gold. And I got to start looking at gold at 130 for the expiration times. Silver as well, and copper. So we got to start hitting those metals maybe early in the show. We'll see if we find anything next week. Well, checking out gold, what do we have right here? We had to move on up to about 0.5, almost broke that 0.7, had a huge, just a massive move right there. We got a deviation right, I keep hitting the draw the line button. I got to hit that ruler button. So, all right, so we got the deviation 2-1. And that's going to give us basically a 14-point deviation. Let's draw from high to low. So that's sort of, obviously you can see that's the theme of today's show, and making sure you understand how to do that. So right there, 32. That puts us right at basically a solid 2 deviation mark from a high to low, which is, by the way, 95% of expected move in a day. Okay? So we really don't expect it to go, any further than that at all. I think it's actually 97%. I have all the stats on the site. But, that's a massive move. Now, gold is, out of all the ones that can move, gold can really move. Yesterday, check it out. I don't know if you can see this right up here. Look at that move. That's just awesome. We actually had a 3 deviation move, which is like 99.7% of all probability of movement. Right there to 3 deviations from the settlement. And, to the tick. Let's see here. Let's see. What is the high? Is it right to the tick? 17.5. So, yeah, one tick shy. We missed it by a whole tick. If you look at the bid and ask, if we were going ask charts, it would have hit it, right? So I always give a few ticks, by the way, when I say to the tick, because you got to account for bid-ask spread. So usually at least one tick is in there on the bid-ask spread, just on the ask side of the quote. And your charts are usually quoting at bid or last. And like right here in my charts, I can go in and I can say quote last, because to me that's really what matters. But I could also say quote the bid, and put that up there. And let's see what the picture looks like if I do that. We'll back up again. So let's see the bid. Actually, it's a little bit under, right? So let's go over here. Let's check out now the ask. So and you can do this however you want to. So what I've literally seen people go in, and when they're buying, they have it on the ask, and as soon as they're done getting in, they'll actually flip it to the bid, because now they're concerned about where they can get out. So I think that's actually a pretty smart technique. And the last is where the last trade got filled. It's not where the bid and ask is. So there's actually 3 different things on there that is often very confusing to the new trader. But you'll see, like right here, we didn't have the bid nor the ask. Let's see if let me get back up because I want to look at that. Okay, so we got our bid is what came right up here. Our ask is what came right up here. Came up to 1417.5. There was also an order filled there because that was the last fill. But you may have an ask and a bid, and there could be a better price filled in between them that never shows on the chart. So a lot of times I could put in an order and for a better price than the ask, and I could have got filled on that price because somebody hit my bid. And I'm putting in an order. When I put it, this is so confusing to say, but basically when I put in an order to buy, I'm actually bidding the market, okay? So I'm putting a bid out there, somebody going to hit my bid. As I offer, they'll go in, they'll fill that for me. And then when I'm putting in a seller, I'm actually putting an offer out there, and they can hit my offer. And so people can actually hit inside the bid-ask spread and hit that, and that may not, and often is not, reflected on your chart. It's only reflected either on a last chart, where you have the last fills, or it's reflected on a time and sell sheet. So, but let's see here. We'll go ahead now and check out silver. And let's see what we got. All right, we got a look at that, one deviation. We actually got a little more than one deviation total, right? So if we go up here from the high all the way down to the low, we got a move of 0.765, and a true one deviation is the absolute one deviation, basically 0.5. So we got like 1.5 deviation move on that. And so how could you use that to your advantage when you're trading? Well, you might be able to tighten your stop sooner, because you could use that same 10-minute method at a one deviation from high to low. So we're going down here. I'll draw this line randomly over here. And I mean, it may actually end up lining up at a deviation. Let's see if it does. Let's bring it to 0.5. So right there, actually it's a little bit tighter, a little bit sooner than the 0.7. But either way, it would have came out the same. And just as a reminder, the method that I teach is, let's say you're short on silver. Yeah, you have a silver contract, you're in here, you're trading it down, 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 the market's just falling. What do you do? How do you handle it? How do you tighten your stops to get the maximum profit? Because that's obviously all of our goals, to, get the maximum out. So you go in here, you decide to sell. Where can you tighten your stop? All right, well, obviously you can tighten it there because it actually closes below. When it goes below, we can tighten that stop right there, because this bar, the way that I trade a breakout of the previous bar's low, and then I'm looking for the bar to break that. I call that an apex. So it's an alert, pivot, entry, and then confirmation of trend. So this bar then now closes below the deviation. I can trail my stop down. Okay, it keeps moving down, and you get all this oscillation, and man, this thing's just staying here for 2 hours, and you're flipping out, more than 2 hours. And this is hard. How do you really give yourself room to let your profits run? And but you just let it do its thing. You can't lose, okay, at this point. You've already locked in your profits. So just chill out and let your profits run. Otherwise, you give them all away. And it's moving on down. Right there, boom, closes below the deviation. Tighten the stop to 5 ticks above that. All right, so now this thing flies down right here. Boom, tighten the stop. And, man, if you're doing this in any other way, you're out of the trade. Because, that's just a massive move. You're done. You want to be, this thing starts pulling back up, you're flipping out, right? Because it's a lot of money. Right here, between these areas, is an insane amount of money. At $25 a tick on silver, it's huge. So moving on down here, coming on back up, coming on down, coming on back up, coming on, right there. We get to close below the deviation below 22.18. Now we can tighten our stop yet again to right here, okay? And then it pops on back up, 5 ticks above. Finally, boom, right there, hits us, knocks us out. We're out of the trade. Not a bad trade. So that'd basically be getting in at an entry price right over here. So for a quick estimate for you, about 0.50. So and you go in there, like I said, you look at that's a massive, massive move to be able to take advantage of on silver, and that's just using the deviation lines right there. So let's go in, let's pull that up. I'll talk about what that means to you as a trader. So again, if you go in, let's see, silver takes at $25 a tick, takes in 0.005. Okay? So as a trader, you go in and go, what does that mean? You're trying to figure it out. That's one of the things that I don't like about futures, is trying to figure out all these ticks. But if you go 0.505, okay, divide that by 0.005, you have 101 ticks. times $25 a tick. That's $2,525 in one trade. Yeah, pretty nice. So that's just taking a short trade, but it's using the deviation levels to trail your stops all the way down. And silver, that's a tough market to trade. So you just want to be aware of it. You can trade spreads, you can trade binaries on it. I'm not a big fan. I will tell you, I'm not a big fan of the spreads on silver. And let me show you why, because I think this is really important to point. Now, the binaries are just fine, but the spreads, like I said, just not a big fan at all. And let me log in here, and I'll pull this up. And we have a feature that we built into it that actually shows you the tick values of the Nadex versus the underlying market. And what you want is something that basically ticks at the same, really at the same as best or better. And let me show you what I mean. We'll go put the box spread scanner right here. And then we're going to go in and we're going to go to the spread scanner. We're going to hop on over to, now silver's closed now, but I can still pull it up and show you what I'm talking about. So right there, see how it's 0.01 versus 0.005, which means that I have to get 2 ticks, okay, on silver in order to get even 1 tick on Nadex. And which actually means if I need 2 ticks on silver to get 1 tick on Nadex, and every tick on Nadex is worth $1, okay, then that would mean that I need 50 Nadex silver spreads to trade 1 silver future. So probably not my best choice out of all the possibilities. Gold, however, 0.1 to 0.1. So I like that. I can go in, I can trade 1, I can trade a 1/10 of a gold contract, I can trade a half, I can trade 1 gold contract, I can trade 15. So I can do it a lot easier, whereas on gold, I'm trading gold, and now they do have the mini and the micro golds now. The liquidity is not quite where you want it on a lot of those things, but you can do it. S&P 500, it takes smaller in 0.1 versus 0.25. So a lot of cool things right there. Let's go ahead and check out, while we're here, we might as well, all right? Let's look at just a couple possible plays and see if we can find anything just for, lunchtime. And, doesn't mean we're going to find something, but let's check it out. It is Friday. So we'll go on this, and I'm going to change my setting right here to 70. I'm going to change this setting to 90. And I don't want to see everything under the sun, so just give me stuff that's going to expire in the next half hour. Okay? And now I can check out U.S. Tech. I can go through all these. I can also, by the way, look at my FX pairs. So we got all these FX pairs we can check out right here. And basically to see what's available. So we don't really have anything on the S&P 500 at the moment. We also don't have anything on the Dow. We do have some trades sitting up on the small cap. So small cap right now is sitting at 992.4. That's not a bad trade. So we got about 13 minutes left on that one. So we're going to open that up on both sides. What this means is if the Russell will stay between 993.1 and 991.1 in the next 12 minutes, then we'll basically bring in about $50 on the trade. Okay? So putting that trade on. There we go. All right, so we got that one in. We got our levels defined over there. And let's check out what else we got. This is just a quiet lunchtime hour. We got a potential NASDAQ trade popping up right there. See if it keeps coming in, going out, coming in, going out. 3013 on the NASDAQ. That gives us about 2 points. And we do seem to have a little bit of uptick volume going on. So I might grab at least this side right here, and then if it keeps going up, I can grab the other side. So I'm going to buy the 3013 and put that one on. All right, so we got those trades going. Now I am going to monitor these, okay? So now I'm going to bring in a decent amount of money if they stay in between the ranges. My risk is about 50 for a potential $50 profit. I'm looking at a lot of things off the screen, by the way. I'm looking at time and sells. I'm looking at charts. I'm looking at deviations. So I'm looking at a lot of little different pieces all at the same time. The main goal here is just to show you how does it work, okay? So anyways, those are in, going right now, and moving for us. So let me see what we got over here. We got all those trades on. And we can go down. Let's check out our FX pairs. Okay? So, let me see. I got my 3 tickets. I'm going to move those over. All right, so FX. We got Aussie dollar 0.0960 and 0.0590. That's like right in between. We'll grab that on the Aussie dollar. Throw those trades up. Right there. Okay, so we got that one in. And we got this one on right there. Okay, so now we're trying to stay in that range. Basically, that gives us 5 ticks up, 5 ticks down. Let's see, US yen, a little more volatile pair. Got to be a little more careful on that one. So 7.8 to 5.3, 10 ticks on that. 8.4 to 7.4, euro yen, obviously much more volatile pair. Got to be very careful. I've had a little challenge trying to do these things on this right here because they can move so fast. And you can see that's already like in and out. But a euro yen, 130.75, yeah, we're definitely not touching that. Okay, so we got a few trades on. A couple of them are starting to go into profit now. And these are just simple premium collection trades. Lunchtime premium collection. And that's really all we're trying to do. Our goal is just that the thing stays, above the ones we bought and below the ones that we sold. And if we'll do that, then the trades will be profitable. Now, if it gets to the point where we bought or where we sold, like we went in, for instance, we bought the 3013 on the NASDAQ. The NASDAQ's right now at 3014.50. If it gets down to 3013, I may just want to go ahead and bail on the trade. So, take a $25 hit versus taking a $75 hit on the trade. Okay, so going for $25, risking $25. Now, if I'm butterflying, okay, it's even cooler because then I can make money on one side to help hedge the other side, so I don't have to hop out so fast if I don't want to. We'll stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at tfnn.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. Just checking out these trades, wrapping them up here. Got a few more minutes left. Most of them already in positive territory right now, so just letting that time decay eat away. So got to love time decay trades. So nothing sweeter, man, just letting the time pass by and getting paid for it. Anyway, so we got 5 trades on right now. Let me show you these real quick from the ones that we just placed right before that commercial break. So, and they're just sort of oscillating around right now. And so far, we're doing good. So, now remember, you can always close out trades before expiration. Okay? You don't have to wait until expiration. So you do have the ability to do that. Except one important thing. Okay? The last 2 minutes. The last 2 minutes are probably among the most important things you need to remember, because you can't really do anything during the last 2 minutes on the binaries. Okay? So if a trade is too close and you're uncomfortable, those last 2 minutes, I mean, now if some other trader decides to take your trade, great. But, you know, they may not. And like this one's at 9595, yeah, that's good. Okay, so we got 5 ticks on that. But you're probably not going to be able to get out of the trade in the last couple minutes. So if you do want to get out in the last 2 minutes, you better do it before they come up. Otherwise, you're in until the end. In those last 2 minutes, like I said, you may not be able to adjust the trade at all. So, you know, an example, I mean, you literally just hop on here, you just click the green arrow next to open positions, and you hit place order and get out at the market price. Okay? That's how you would actually do it. So you want to update to the current market price if that's what you're trying to accomplish. Okay? But it's very, very important. Most people don't understand that, like, last 2 or 3 minute rule, and they're like, I want to get out now, and they can't. And that's why. So, but just be very, very, very cognizant of that. And the way they determine whether you're profitable or not is whether or not the trade expired in the money or not. Okay? So, what does in the money mean? Well, if you're buying, it means that the price is above the strike. So, like, above, you know, 95.90 would mean it expired in the money. Okay? If you're selling, it means at or below. So, like, if I sold, it means below, say, 993.1 on, say, the Russell. If it expires at or below that price, then I'll be profitable. And so, again, all you got to do, if you want to bell, you just click and get out of the trade. And it's better to take a small loss than a large loss on the trade. Now, what they're going to do, okay, is they're going to take the last, like, 25 trades, and then they're going to average them. Okay? They're going to take the last 25 trades, they're going to take the top 5, they're going to take the bottom 5, and then they're going to get rid of the ones in between. All right? So again, they're going to take the top 5 and the bottom 5. So they take the last 25 trades. So that's why I'm looking at time and sells. Because they want to look at those last 25. And so we'll grab that right there for you. And then they're just going to average them out. So if I've got a time and sales window up here, for instance, like here on, ES, okay? Like here's all the contracts coming out, the time and sales coming out right there on ES for us. So those last 25 contracts, that's what they're looking at. And then they'll take the top 5 and bottom 5 out so you don't have weird, miscellaneous, random stuff. And then this is where you're going to get really freaked out. See right here? There's actually no quotes. I want to show you this. I'm going to go over here to the indices, binaries. And people think, like, I'm losing. Okay? You may or may not lose. But let's actually look at the reality of what's going on. Right there. There's no quotes. These are other traders like trying to bell. So that's not your actual market and P&L. There's basically the market's dried up. The liquidity's gone. We are profitable on these trades. They're looking good. And it looks like all 4 of them are going to be profitable. All right. Y'all have a great day. And I will see you Monday right here on the Diagnostic Trading Hour.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.